What changes in the 5 years after retirement? So let's talk about this time period a little bit. These are important and valuable years for a number of reasons. And I've got a great list here for you with some real considerations that I think you're going to find interesting and want to take a closer look at. But let's start off. Federal employees often find themselves in a favorable position to maybe retire a bit earlier than non-feds. Okay. And that's because the way your federal benefits set up. So there's a sweet spot depending on how many years of service, the eligibility that you have between ages 57 and 62, where many federal employees will consider retiring. So that's a bit earlier than most non-feds who are generally looking at Social Security benefits when they can time those with the other assets they have, 62, 65, 67, depending on how long you're even able to work. Okay, so that's a favorable position to be in. Now, that's not to say both opportunities and risks exist during this 5-year time period, especially if it's a little bit earlier. There's some unique challenges we want to address. But as I mentioned, I want to really highlight 3 considerations here that I think you're going to find valuable and interesting. Then we'll get into, I got a list of about 10 things that we're going to talk about, opportunities and risks. Good stuff for you to consider. So little bit of a teaser. We're going to talk about aging, settling into a new lifestyle. Your income sources shift during that time period. There's tax considerations. There's a Roth conversion window. There's Social Security considerations, sequence of returns. Legacy planning comes into view, becoming comfortable with your spending patterns and priorities. There's some big mistakes you might make. There's some big opportunities that you might take advantage of. Mindset shifts can be challenging, and this 5-year period is all about that. So let's talk about those 3 considerations first. I'll get right into those. First one is aging occurs, okay? Obviously, aging occurs, right? So I find this interesting. A recent study highlighted ages 44 and 60 as these distinct time periods when humans undergo significant aging due to science, some sort of molecular change that occurs within the human body. I don't understand that part of it. Obviously, in the financial world, not in the medical world, but I did feel it when I turned 44, okay? So I think there's something to it. And so those 2 ages stand out, particularly 60 if, that's around the time that you're thinking about retiring. And it's really something that we can't overlook. Think about how you felt 5 years ago from today, okay? So significant changes do occur, and that's something that we need to think about during that 5-year time period and take advantage of being the youngest that you'll ever be. Because today, obviously, is the youngest that you'll ever be. The day you retire is the youngest you'll ever be in retirement. So we got to take advantage of those 5 years. Now, the good news is with more time available, you'll have an opportunity to focus on your health, maybe exercise, whatever it is that you want to focus on to give yourself a better opportunity to feel great and maybe even feel better than you felt while you were working due to, different mindset, as well as getting more physical activity and focusing on these things that become important. But I think that aging occurs and we can't overlook that. For those reasons, take it seriously, as well as make the most of that time period, right? We talk about, I don't love the go-go, no-go, slow-go year thing that we talk about in retirement planning, but it's true. Like those are the years that you're going to have the biggest opportunity to get out there and do things. All right, the second thing, this one is talked about a little bit more, but getting settled. So during that 5-year time period, you're going to be adapting to a whole new lifestyle. Building community and relationships are going to occur within that 5-year time period. This is really valuable. We found that the biggest factors to determining a successful retirement are activity and purpose. Okay, I talk about this all the time. I can't talk about it enough. Tying those 2 things together, having an idea of what activities you want to focus on and making sure that those activities are supporting the purpose or giving you purpose and validation, really important to your mindset and your well-being, offering the opportunity to have a more successful retirement from that standpoint. It's a formative time period where you have the opportunity to identify communities, people in similar circumstances as your own, be making new friends, adapting to these new routines, the activities you want to pursue, and the people you want to pursue them with. Relocation is often a consideration as well if we're talking about, getting settled. Oftentimes retirees will want to move closer to kids if they're not already in the same city or close enough to visit the family on a regular basis. They'll relocate for the purpose of living in your dream location. Or maybe it's a financial decision, somewhere that's a bit cheaper when it comes to property taxes and just the financial footprint overall that makes it work a little bit better. So one of the big questions we often ask is, how are you spending your time? What are you doing? Who are you spending that time with? Okay. The last one I'm going to highlight here is your income sources are going to shift likely to your investments, at least for some portion of your total income need. Now, know with a first pension, potential Social Security, whether you hit that 62 to 67 window and you're going to claim those benefits, there's often going to be a shift, at least partially, to your investments for what you need from an income standpoint. Okay, that 5-year period can be really pivotal from this standpoint. The sequence of returns can really play a big role. So if you hit the ground running, you retire, the stock market's great, your investments perform well for the first 2 to 5 years, you're going to be in a lot different position than if we have a pullback, a downturn, a bear market for a year, 2 years. It has the potential to change what your income situation looks like if you're not planning appropriately and positioning the portfolio in the right way. Being positioned properly is essential. This time period offers the opportunity to really define what the next 25 years of your retirement might look like. It's that important. A couple key considerations: refilling buckets, considering raises to your income, depending on how underlying investments are performing. Thinking about gifting strategies. Okay, so if legacy comes in your mind, I talked about that earlier. It's one of the things we're going to look at in that 5-year period. If legacy comes into view, considering gifting strategies. And then, as I mentioned, potentially weathering a storm, right? Whether it's markets, the economy, if we have a downturn, weathering that storm and then making adjustments. All right, so those are 3 big considerations. I've got a list here of some opportunities and risks. We'll move through them pretty quickly, but things that you're going to want to consider within this 5-year time period that are really important. So on the opportunity side, of course, we talk a lot about this on this channel. Roth conversions, if your income drops when you retire, could offer a good opportunity to do some Roth conversions, especially if you have a big pre-tax balance in that TSP, IRA account, whatever it might be. Social Security timing, this gives you an opportunity to work through your planning on when you're going to time taking those benefits. Do you take it at 62? Do you wait? Do you take it at 67 or delay even further? And some big things that come into play is spousal benefits. I should say survivor benefits come into play here. So lots of important decision-making to do there. Big opportunities. Fine-tuning your investments. This is a great time to fine-tune your investments. It really should start prior to your retirement, thinking through how you're going to position appropriately for that income that you're going to need. So big opportunity there. Legacy planning, as I mentioned, this comes into view as we retire. Do you want to give while you live? I think it's a wonderful thing to do if you can. Of course, you don't want to jeopardize your retirement or your situation currently in order to pursue those legacy goals. But if you can, it's a good thing to be thinking about, a good opportunity to highlight. Again, with back to taxes, looking at tax brackets and your withdrawal strategies. So this kind of goes hand in hand with Roth conversions, but thinking about where you're taking money from, what type of account. Are you tapping your taxable investments first? Are you looking at pre-tax money? Are you looking at Roth money? What's kind of the sequence and the strategy that you're going to use there? Great opportunity to update estate planning. Okay, so we talk to so many people that are retiring and their estate documents have never been completed or they haven't been updated since the kids were born. Okay, so great opportunity to sit down, take a closer look at this, make sure things are buttoned up the way that you want them to be. And then again, back to kind of taxes and withdrawals, planning a proactive RMD strategy. So that kind of goes hand in hand with Roth conversions potentially, as well as planning the withdrawal strategy from all of your accounts. So opportunities there. On the risk side, of course, there's risks in day-to-day life, but when it comes to retirement, those first 5 years, taking too much risk or not enough, both of those things are looming out there. So if you're not taking enough risk, you're not giving your portfolio a chance to keep up and give you raises over what could be a 30 or longer retirement period. So you got to be allocated the right way. Of course, if you're being too risky and we see a drop, again, that can work against you as well. And that it ties directly to the sequence of returns, which is one of the biggest risks in that first 5 years. Another risk, overlooking taxes. So we talked about that on the opportunity side. If you're not thinking about this, if you're overlooking it completely, that's a big risk. I mean, you could be costing yourself thousands of dollars if you're not planning appropriately from that standpoint. Not looking at Social Security timing from all the angles. We mentioned that again as an opportunity, kind of goes hand in hand as a risk. So if you're not thinking about those survivor benefits, if you're not thinking about the impact of how Social Security benefits work and the timing, how those benefits increase over time, that could be a risk to your long-term income plan. And lastly, I'll highlight spending too much, spending patterns, right? So if you get comfortable spending, you spend too much, you draw down those assets too soon, too quick, that's a risk. We also see that on the other hand, not spending enough, right? We want you to enjoy things and spend the assets you've worked so hard for. So anyway, hopefully that's given you some things to think about here today in those first 5 years, those big 3 considerations that I mentioned, as well as highlighting that table of opportunities and risks, which really kind of work together, right? But just some things that you can be thinking about, even if you're not in those first 5 years, if you're working up to it, or you've passed them, it's still a great opportunity to review this stuff, part of your holistic financial plan. So hope you found some value here. If you have, we'd love if you give us a like and subscribe. If you're working on something, we'd love to hear from you. Love to hear your questions. So please feel free to reach out, and we'll hope to hear from you soon. Talk to you next time.